John Meyer is one of the leading figures in the mining broking world. He works for SP Angel and he's been a man of many parts and many talents over the years. John knows a thing or two about gold, precious metals, base metals, and many other things besides. It's a pleasure to talk to him today. Welcome to you, John.
Nice to see you, Alistair. It's been a short while.
Yes, it has. But there's been so much going on over the past months that the time just seems to fly by, doesn't it?
It's an extraordinary start to 2006. There's no doubt about that.
Or 2026, I should say.
2026, yes.
So let's start with the sort of headlines of the day then. I mean, we can't really fail to notice that gold is just flying, isn't it, really? I'll just leave it at that, really, and throw it over to you, John. What do you think? What do you make of it?
Well, when we look at the price movement in gold, and particularly when it's moving, yesterday we saw a new high in Asian trading. It was at 11:30 at night. This morning, actually, the new high was in London trading, which surprised us. And sometimes I think London is catching up a bit with what's going on in Asia. So we've moved on from central bank and sovereign wealth buying. I think those guys may well have stepped back a little bit, although it's always possible they may be still throwing orders into the market to buy the metal. I think what's really driving it now is ETFs. It's small investors, maybe even some institutions, but generally lots and lots of small investors. I mean, we used to talk about the Mrs. Watanabes in Japan. So I think the Chinese equivalent, they don't particularly trust their government. They don't particularly trust their currency. And frankly, actually, who in the world would right now? So they are buying gold. They're buying physical gold and they're buying ETF gold. The Indian market, I think, slowed down a lot. They had been buying gold up for the Festival of Light, Diwali. Jewelers would have stocked up ahead of Christmas and all of that. So we wouldn't be seeing that kind of buying. But I think what we are seeing is lots and lots of investors buying ETFs. We saw a big jump in ETFs yesterday, as in, well, we saw the data yesterday, so it's the data from the day before. So we are seeing a lot of that, and at some point that will come to an end, but it is still driving prices higher. And I have the feeling that certain other investors may carry on throwing orders into the market, probably to either get as close to $5,000 an ounce or even through $5,000 an ounce. Now, there may be an element of options trade, perhaps anybody with a short position being stopped out, that kind of thing. There are videos doing the rounds on social media talking about the US banks being particularly exposed to derivative trades based on silver, and that there isn't enough physical silver in the world to meet those options trades. I'm not sure I buy all that, and we're going to have to look into that a bit more closely. Yes, there are always huge amounts of derivatives on gold and presumably quite a lot on silver these days, but the market never expects to settle those physically. It's just derivatives contracts that do all sorts of strange things that trade through gold one way or another, because gold acts as its own currency, and it's a currency that you can't easily devalue. Okay, there are gold miners around the world trying to produce more gold, and there are industrial companies consuming it as well. And let's not forget jewelry in that. But a lot of it is still dug out of the ground and stored in vaults, but it is still seen as an ultimate store of wealth. And I think it feels as if we're seeing crypto being sidelined for whatever reason. And I'm not sure I understand all that. And gold and silver are taking over.
So what's your assessment of the role of central banks at this point then? I mean, you talked about ETFs driving the price. Are the central banks sort of still the backstop to that, or are they playing less of a role in setting the gold price at the moment?
Well, this is something we never really know, because they don't usually tell us what they're doing until after they've done it. I think it's possible they may be trying to influence the price, because the more it goes up, the more it helps them. But of course, because of the massive rise in gold prices, the balance or the ratio of gold to other assets within the central bank vaults is becoming a bit skewed on the upside. So it is possible that central banks might actually start to lighten their load. If they feel that gold prices are going to stay at elevated levels, they may say, well, we've probably got too much of this now, and start to sell it off. And I think it's, it doesn't feel like a huge risk, but I think investors should be mindful that there will be central bankers out there saying, this is, we're probably holding too much compared to US treasuries, European bonds, you name it, all the other bits and pieces that they hold. Now, having said that, they still feel that gold is a great store of value, and that's why they hold it. But it is quite possible they may say, well, we just got a bit much of this now, and we need to rebalance.
I mean, one or two big investors moving out of gold as well. I'm thinking particularly of Jim Mellon, who's played, something of a significant role in trend setting over the last couple of years. He recently said that he's leaving the party. I think he said he wanted to leave some punch in the punch bowl, or he wanted to leave before the punch bowl was empty. Some metaphor along those lines. And I imagine he's not the only one who's thinking about taking profits and moving on.
Well, Jim is a very smart investor, and he would have ridden the wave, so to speak. I know in recent years he's been quite focused on the biotech sector, and the UK healthcare sector is fantastic. It's world leading. There are lots of world-class companies being incubated in the UK with amazing new ideas and developments, and I think that's really where Jim's focus has been. But it's good that he's making profits in mining.
Absolutely, absolutely. So, I mean, John, you guys at SP Angel put out a daily note, and a lot of it, not all of it, but a lot of it actually concerns news releases from companies themselves. So, which companies strike you as being interesting in the gold space at the moment?
Well, the first one that springs to mind is Anglo Asian Mining. Market cap is probably somewhere around £400 million today. Good company, very well run, great management. It's in not everybody agrees with the jurisdiction. It's in Azerbaijan, but you can't disagree that the government has been extraordinarily stable for many, many years. It's sandwiched between Iran and Russia, so it has to play a diplomatic game. But they've got a joint venture with the government on a new copper mine that they've been invited to operate and restart. And that Demerli copper mine should ramp up to about 20,000 tons a year of copper. Okay, that's not gold, but they're still producing quite a lot of gold out of the Gedebek mine in the mountains of Azerbaijan, and they have 3 other mines, in development. In fact, one new mine has just come in with production in the last quarter. So, yeah, I think it's got growth. One of the things that we like to look for in these companies is its growth potential. Are there the resources, reserves, new mining opportunities to take these things forwards? And yeah, when you're choosing a mining stock to buy into, you want to pick good management and you want to look for growth.
What do you think of Caledonia Mining? They seem to have some track record of success and some growth ahead of them. Do you have a view on them?
They certainly do. Yes, no, and they're good dividend payer. They operate in Zimbabwe, and the Zimbabwe government does tinker around with the royalties and the various ways that people get paid for gold. But what they're doing is really trying to keep out the Chinese, I think, and take better control of the artisanal miners. So we did get a little bit concerned a while ago on what was going on there, but in fact, it looks like the Western miners are not being impeded by the government. And yes, Caledonia is certainly proven itself to be a great producer.
And do you like any explorers? I mean, obviously it's a time to be in production, but are there any exploration companies that look good to you?
There certainly are. I'm sort of stretching the memory banks to think of who's out there. Yeah, I mean, quite a lot of people have been focusing on copper, but sometimes you find gold as well while you're in the process. Companies like Power Metals. Gosh, I'm trying to. Alistair, you've got me there.
I mean, it's quite interesting, isn't it? Because that sort of goes to show that the focus really is on the producers these days, and the explorationists have kind of sort of taken a back seat in terms of where the investment attention is going.
That is true. I mean, there are explorers out there. You've got people like Ethereum who look, they're looking for copper in Morocco, they're looking for lithium and tin in Rwanda, and again they're in Botswana looking for copper. But it's quite possible they might find gold while they're at it. Yes, I mean, I think both metals are certainly on a run, and the attention is there for as soon as anybody finds anything, the stock will take off. Look at Tertiary Minerals in Zambia. In fact, the investors are waiting for results on a silver prospect that they are drilling, and the stock is actually just taking off now. So there is certainly interest, and anyone who's got a bit of a sniff of a discovery is very, very interesting indeed.
Okay, let me ask you a more general question then before we turn to copper, because you've mentioned that a couple of times. Just in terms of the gold mining industry, is it your perception or understanding that there are a lot of new projects in development, or that there aren't many projects in development? How do you understand what's happening in terms of the volume of new production that's likely to come on stream?
Well, there are a few. I'm thinking of Metals Exploration, for example, who bought Condor Gold. Very good timing buying Condor Gold. And that's in Nicaragua. Again, it's a slightly tricky country, but they made things work in the Philippines. It took them quite a long time, but they got there. So, you got to, on the one hand, investors had a long and difficult wait, but the company has got there. And with the gold that they can develop in Nicaragua, I think that will do very, very well. So yes, there are a few, but they do take time. I mean, it's one of the problems of the mining sector is you've got to be a patient investor one way or another.
Yeah, indeed. I mean, let's segue with a similar question into the copper space, because I mean, one of the things that people are trying to pitch copper exploration stories often say is that there really isn't much new in the way of big new copper mines that are visible. We can't see where the next big copper mine is really coming from. I mean, do you agree with that? And how, perhaps more generally, do you see the copper market shaping up?
There are some new mines being, shall we say, defined at the moment. And in recent years, you had Ivanhoe with the Kamoa mine in the DRC. That's one of the recent big ones. In fact, Robert Friedland, who runs that, also kickstarted the Oyu mining project in Mongolia, and before that was sold on to Rios. So there are entrepreneurs out there who are quite good at it. But again, it's been a long old road, and these things tend to come along once a decade rather than more frequently. You've got SolGold just being acquired by the Chinese. But again, that's going to be even with the Chinese building it, it's going to be a 5 or 6 year development timeline. There'll be a bit of copper they can start from a surface operation, and that's what having that surface Kickstarter mine will help them get into the bigger mine. Now, that's assuming the government of Ecuador doesn't throw any massive roadblocks in their way, because that's always possible. But no, and there's some stuff going on in Argentina. Now, Argentina's seen as a great place right now with Javier Milei running the country and running around with his chainsaw once in a while. But again, that can change. If the Peronistas take power again, then Argentina may suddenly not be on the map. So there are new developments being planned up there, but not really enough to suddenly swing the market back into a big surplus. And the reason why copper prices are hovering around the $13,000 a ton mark is that the market is looking for a deficit this year. No one's quite sure. Is that going to be a 200,000, 400, or 500,000 ton deficit? But whatever it is, it's going to be a problem, particularly in China, And this is why treatment and refining charges are down at zero levels. In fact, sometimes they're paying you to process your copper concentrates. And that's because so much physical copper has gone into the States on the back of Trump's policies. Or Trump is possibly going to bring in tariffs on copper imports, and the US does import a fair amount of copper, and those tariffs would be designed to try and incentivize mining companies to develop new copper mines in the States, which is difficult. Not because of the cost of production. It's actually difficult because of all the legal objections that everybody gets when they try and develop any kind of mining project in the US. Although it's a state by state thing. But particularly in somewhere like Minnesota, for example. But it means the Chinese they've developed a lot of copper smelting capacity, but they're struggling to get hold of the concentrates. And now that the Grasberg mine, it's a huge copper mine in Indonesia, is largely offline. There's some bits of it that are still working, but the mud rush that they had into the block cave that they run. And a block cave is, as it says, it's where you literally cave a huge amount of ground, so it collapses and breaks under its own weight, and then you draw it out into draw points, and you truck or rail the material out of the mine on a very large scale. But that's all offline because it's gummed up with mud. Simple as that. So that's a problem for the Chinese. They're struggling to know where to get the copper from, at a point in time where they're trying to connect lots of new wind farms, lots of new solar farms, and putting in more and more electric vehicle chargers.
So you see the projected deficit perhaps continuing into the sort of medium term then?
Yes, it's difficult to see the copper supply or mine supply catching up with the market for a few years. Copper mines just don't come on stream that fast. There's a private company, Moxico, that's probably going as fast as anyone can, but it's restarting old mining projects in Zambia, and it has the full support of the president and the government. So that kind of gives it a fast track into production. They're planning on listing next year, but investors can still buy that, and I'm a happy shareholder. But so I think I would encourage investors to look at private opportunities as well, because I think that's where there's a great deal of uplift sometimes.
Interesting. And so what about the bigger copper producers? Do you have any that particularly stand out to you as being more attractive than the others, or are they sort of all broadly doing the same thing?
Well, you've got Glencore and Rio Tinto talking about either merging or Rio Tinto acquiring Glencore, which I think is the technical way it will happen. And that really is largely to bulk up on the copper side. Everybody can see that being a big copper producer is going to give them more strength, more of a solid platform, particularly if iron ore prices start to fall away a bit. I mean, China is not building the massive amount of construction that it did, say, in 10, 15 years ago. It's done all that. And if you look at the stats in the Chinese property market, they're pretty horrendous. They're still kind of deflating their property bubble. I mean, it wasn't a property bubble on the scale of the Japanese property market, but it was still overdone, and they didn't have enough buyers for everything that was being built. And then they didn't have enough people who could afford to buy those apartments either. So it's a big story, and the Chinese government is still working through the over exuberance in that particular sector. But what it means is they're not using, well, I would say they're not using as much steel as they were. They're not using it for that kind of construction. They still seem to have an incredible appetite for steel and for iron ore. So prices are still around $100 a ton. And for Rios and BHP, who produce it at something like $15 to $20 a ton in Australia, that's still a great business. But ultimately, that's probably going to start to fall away. And Rios and BHP are looking for other assets to bring in so that they can support their portfolios, probably with more copper. And copper seems to be the default for that.
Yeah, I mean, copper they call it the bellwether for the global economy, don't they? And so we sort of start there in terms of projecting forward what might happen in a wider sense. But what other commodities catch your eye in the current environment, John?
Well, tin prices have actually surprised us on the upside. We got to $54,000 a ton earlier, must be late last week, and prices are still around $50,000 a ton. So that is extraordinary, because if we go back a year ago, we were at 25. So it's a wild market when it moves. There isn't, I can't think of when anyone discovered the last tin mine. I guess it was Andrada, which is in the UK market. That's on AIM. We act for Cornish Metals, which is redeveloping the old South Crofty tin mine where I worked as a student. So I know that one well. Yeah, and at these prices, those projects will throw off enormous amounts of money. Andrada are fortunate; they're already in production and they're looking to scale up. Cornish tin, in my view, will be in production, within hopefully a couple of years, and good scale production at about just under 5,000 tons a year, which in the tin market is pretty good going. So yeah, tin is looking tight because, like silver, a lot of silver and a lot of tin is being used in electronics, in solar panels, in electric vehicles, in anything that's kind of renewable. And what this means is probably the world is taking a risk at running short of these metals. And if it runs short, then prices are going to go sky high. So it may be that $50,000 a ton is not the end of it. We may see prices go higher, but certainly at these levels, these companies are not just twice as interesting as they were, probably 5 times as interesting as they were.
Interesting. I mean, you guys occasionally mention Rome Resources in your morning notes, and there's also Alphamin over there in the DRC. Do you have any sort of comment on either of those two companies?
Well, Alphamin produced record results this morning. So they are doing well, but remember, they are not so far away from the M23 rebels in Goma. Alphamin are a little bit away from that. They haven't been affected. They've only had to evacuate the site once or twice over the years. I think it's very hard to move around that part of the DRC. The roads are so bad. If you only have to travel an hour in the DRC and you never complain about a UK pothole ever again. I mean, they've had potholes that will swallow whole vehicles. So it's a different sort of place. But even so, the security situation is an issue. Rome Resources, it's actually a good explorer, and quite likely to come up with a decent tin deposit going forwards. Maybe something Alphamin might like to move on to. So yeah, I think it's a good investment, but you wouldn't put it to widows and orphans right now.
Yeah, well, you could say that about quite a few of the companies in our space, I guess. So we talked about gold, copper, and tin. I mean, these prices are moving quite dramatically, aren't they, John? And some other commodities prices are moving. I mean, do you think it's fair to say that we're in a general commodities bull market at the moment, or are we not there yet? Do you think it's commodity specific? How do you view the sort of wider person who might have a broad array of commodities in their portfolio? Is that a good move, or do you think you've got to be very picky?
I think everything is quite specific, but a lot of them have moved higher. So tungsten, for example, has quadrupled over the last few years. It's up at $1,000 per metric ton unit, which is a huge price. Now, okay, that's because people are throwing stuff at each other in Ukraine. That's because lots of armaments are being developed. Also some other technological innovations as well. But it just goes to show there are more things going on than just gold and silver. Copper, tin, even nickel's moving because the Indonesian government, in fact, the Indonesian government's done 2 things. It's closed down a lot of unofficial, I don't want to call them illegal, they're probably illegal, but unofficial tin mines in a certain part of Indonesia, and the government's taken them over. And it's a big cleanup operation.
Nickel mines.
And that has disrupted the tin market. And the same thing looks like it's about to happen in nickel. Now, it's a different situation in that China developed a lot of new nickel production in Indonesia, and in fact they overdid it. They produced so much nickel they depressed the market hugely, and the Indonesians don't like that. They like to be able to manage a market if they can, and they certainly don't like people making a mess of their islands. So the nickel price has been moving higher recently, and that may be something. If the Indonesian government shuts down a lot of Chinese production capacity, then certainly nickel will be off to a run. Zinc prices look like they're moving a bit. Can't see where a lot of new zinc mines come from as well. Lead, not so much happening there. And given that the building industry or the building trade is a bit soft in China, in the UK, almost certainly in Europe as well, then lead probably gets a bit left behind. And lead acid batteries, well, actually lead acid batteries, interestingly enough, are used in electric vehicles because they're seen as running all the 12-volt systems. They're actually very good at that. Not good for running the whole vehicle. I mean, nobody wants to drive a milk float. Well, not many people anyway. Remember what those were. Yeah, I mean, something. So as I say, it is specific, but I mean, I'm not sure I'd be a massive buyer of platinum or palladium right now because probably they're going to be less auto catalysts for diesel vehicles. But in the meantime, hybrids do have quite high loadings on their catalysts. So platinum and palladium prices have done relatively well, probably better than we would have expected. I didn't think hybrids would become such a thing, but I do think going forwards, hybrids will give way to more electric vehicles as the batteries get better, as the range becomes longer. I think people will say, okay, it's nice to see the hybrid, but we'll go for the pure electric going forwards. Now, we're not quite there yet. The market is still in development, in transition, but it's moving there slowly. Things are certainly going. We're going to go more and more electric, and by 2030, 2035, the decision making that each individual will make on buying a vehicle will develop in that direction.
And what about silver? We sort of brushed past that earlier in the conversation, and that's been a very spectacular performer in recent months.
I want to say it's all about solar panels. China controls the world market there. There are producers elsewhere in the world, but China is so far larger than anyone else. In fact, the Chinese government has said it's going to start phasing out subsidies for solar and I think solar or something else. So that may start to have an impact. I think prices are going to rise. And in fact, this is an interesting point in that I think China is going to start to export inflation to the rest of the world. As they, so we say, remove subsidies in key sectors, as they raise the value of the Chinese currency, the yuan or the renminbi, whatever you want to call it, then that inevitably will improve their buying power, so they can pay more for metals, will effectively weaken the US dollar. We can see that coming, although I would caution people. It's very dangerous betting against the U.S. economy and the U.S. dollar, but it'll improve their buying power. That helps to improve metals prices, but it will export inflation to the rest of the world as the margins on goods bought from China perhaps starts to squeeze.
I mean, it is interesting to consider, John. You and I have been around in this market for 1 or 2 years now. That when we were starting out, China wasn't really a major factor in this space, was it? And now it's sort of the all-consuming entity.
Definitely, going back to the 90s, we were focused on the United States and Europe, and that those kinds of things. And China didn't even figure in anything. In fact, Japan was much better. Now that is changing very fast. We had a big run into 2006, 2007 before the global financial crisis blew up. Well, it was the subprime crisis, really. So thanks to all those packaged US mortgage products, And then, of course, we had a second run after that when stimulus came in. The Chinese stimulated their economy because they didn't want to slow down. So they bought a lot of metals in as part of those stimulus packages. They were in the fact that's why they ended up with such an overinflated property development market. And of course, they've managed the decline of Evergrande and Country Garden, two of the big property development companies in China. Those almost feel like distant memories, but of course, they're still managing their way out of the debt created by those businesses. With quite a lot of that debt also held by overseas investors. And remember, the Americans were investing huge amounts of money in China and benefiting from that as well. So they're partly to blame for the enormous rise in manufacturing in China. Warren Buffett, for example, was a huge investor in BYD, although I believe he's taken either all or a lot of that cash out now. So the world was more interconnected, perhaps a little bit less so with Trump's tariffs and the sort of trade negotiations that have been going on. But yeah, there's I think we are in another cycle. The question for me is, are the buyers of ETFs pushing prices beyond where they are sustainable? And it's a difficult one to answer right now because definitely there are supply-demand imbalances that look like they're going to lead to deficits. Certainly in copper, and quite possibly in silver. Now, I think, let's face it, there's a lot of silver in silver bars around the world, but then there's an enormous amount being used in solar panels right now. So it's difficult to know how that's going to go. I tend to think there won't be a physical deficit, but I think there might be a bit of a market deficit one way or another. So that's why we're seeing $95, $96 an ounce silver, which is quite a high price. And silver is still perhaps playing catch up with gold. For gold, with the de-dollarization of certain portfolios, as in the Chinese central bank has decided it doesn't really want to hold US treasuries. And of course, why would they? The Fed is under pressure to reduce interest rates further. If those rates go down, those bonds are perhaps worth less. So they've been chucking those out and buying other asset classes, and gold and silver have done well as a result.
I suppose it's perhaps worth just reflecting on the effects of inflation as well. I read recently that although we're seeing record silver prices, actually, if you adjust for inflation, and go back to when the Hunt brothers were messing around in the silver market and silver hit $50, if you adjust that price for today's dollar value, silver still has a long way to go before it actually hits its inflation adjusted record. And I assume the same is true of gold, although I'm not sure, John. Perhaps you can tell me.
Well, the Hunt brothers were renowned for their monumental manipulation of the silver market.
Yes.
So it's hard to know. I'm not sure we should be rebasing the price on what they achieved. But yes, I think metals have lagged for many years. And this is typical of many asset classes, in that there is a lag for a while when these things are a bit unpopular and when there's a bit of oversupply, and then they play catch up. And they play catch up because there's been years and years of underinvestment in the mines. There's so much more regulation. It's so difficult to get the permits to build the mines. It's quite difficult now to get the people as well, to get people with good expertise to build these mines. So it's everything takes a little bit longer and costs a little bit more. Having said that, I think the opportunity's there. I mean, anybody who's got a half decent prospect right now, which will hopefully turn into a mining project, looks like they'll stand to make an awful lot of money.
Indeed. So let's talk about the equities market then, John, as we round out the conversation and sort of start to draw it to a close. I mean, that's something that you guys know a lot about. You raise a lot of money for mining companies, and you do it all around the world. I assume you're off to Indaba in a week or two as well, or somebody from SP Angel certainly will be.
We'll have a team down there.
Yes, I'm sure you will, and I'm sure you'll be on the lookout for some pretty, in some pretty interesting meetings that you'll be having. So, what do the equities markets look like to you, and what have you been doing in them?
Equities are very much playing catch up. So much money has gone into ETFs, and they go into indexes. They go into different ETF vehicles. Some people call them wrappers. They buy an index of gold miners or copper miners. That money doesn't actually feed into the underlying stocks, so it's down to more adventurous investors who do their research and will buy those underlying equities. In fact, it does give rise to the potential for a little bit of manipulation in the indices. And let's face it, traders are always looking for an opportunity to manipulate something one way or another. But there is so much money. I mean, we'll look at the scale of the money in gold ETFs right now: $472 $1,000 billion. Well, no, 472 billion, I think. It's such a big number, it's hard to count the zeros. There's no way you could put all that money into the underlying equities as would have had to happen in the 90s. So it is a changing landscape, but as I say, investors in equities have been slow to come in and buy up those individual companies, and I think that gives actually good opportunity now that we've seen the prices of the commodity prices have risen, but a lot of the underlying stocks haven't, and we're just beginning to see this week to see some of these things starting to move. They've got an awful long way to go.
I mean, do you think investors can continue to expect that fundraisings will be done at significant discounts as they've grown used to, suffering over the last 3 or 4 years?
I think it's possible we might see some fundraisings done at premiums, but the professional investors are always going to agitate for a discount. It's the way they work. And let's face it, if you want their money, you have to work hard to get it. And we know that as the brokers who act, in the middle between the management and the investors. So I think there's going to be a lot of fundraising done, and I think that fundraising will move fast will turn fast into results.
And how does it look to you, John, comparatively speaking? You're sort of pretty on the pulse in London, and you know a thing or two about the rest of the world as well. So it seems like Canada and Australia have been running much hotter than London. What's your take on that?
Certainly Australia, there was a lot of money just moving around Australia because the Chinese had come in and bought up a number of lithium miners, for example. In fact, they've been buying up other things as well, but a lot of money came in, and shall we say that money carried on funding and supporting other stocks. So yes, their market's been running hot for quite a while. When we look at the underlying volumes of shares, London and Australia has been pretty much on a par. In Canada, volumes have been lower, but their share prices seem to move more because there's been an awful lot of short selling in Canada. In fact, we've had a bit of it in London from New York investors, but more of it in Canada. So those stocks have reacted faster as the short sellers suddenly close their positions, and then the stocks take off. And their market they have a big enough market. They got hit very hard with the collapse of cannabis a few years ago, because there were a lot of miners in Canada that seemed to switch to doing cannabis for some reason. Not sure what the connection between mining and cannabis it really is, or if there is any connection other than some of those companies suddenly switch from one to the other. So yeah, their market had been very, very depressed, and not really a surprise to see it turn around quite rapidly.
I mean, I suppose it's sort of hot money is the connection, really, isn't it? You get that with Bitcoin as well, and we've seen a few miners, certainly at the junior end, who've sort of combined Bitcoin with mining in a way that might not have been predicted 5 years ago.
Well, it's an interesting idea. It's a sort of stable coin idea, isn't it? Where you can back a coin with gold in the ground and actually, in theory, could give you some uplift from from taking that gold out of the ground and turning it into real cash. I don't really know how those work. I've not been looking at them in any great detail, but you know what? Bitcoin has provided a source of funding and any source of funding into the mining sector, it can be very welcome.
Yeah, indeed, indeed. So would you say then that reports of London's demise as a major hub for mining finance are premature?
Oh, certainly premature. I mean, we've got a number of IPOs planned going forwards. There are opportunities that I think are going to do well. So, yeah, and you know, there is an investor base in London that I think when they regain their confidence, will come in and support the market.
Indeed. So a number of IPOs. Do you think it'll ever get back to anything like the times you mentioned a little while ago, 05, 06? There was, I mean, I'm not exaggerating, I can't really remember, but it seemed like there was an IPO every week in those days.
Certainly, those were great days, and yes, there were a lot of new companies coming to market, and many of them have been acquired for their assets, or absorbed or merged or whatever. There's been a lot of corporate action going on, and you know, investors can be very quick to forget the good ones. But yes, it's, you know, by and large, the sector has provided cash for investors. So yeah, we've had a tough 10 years. And we are now coming out of that.
It reminds me of something that Harry Adams said to me the other day about somebody had told him, or somebody had worked out, that only a quarter of the mining companies that were around 15 years ago are with us today. And he was that was presented as a somewhat negative picture, but perhaps if they've been acquired in a sort of successful transaction, it doesn't have to be viewed in that light.
Yeah, many of these have been acquired, and okay, and sadly it takes a counter off the table. And Harry knows. I mean, Harry was running EMed Mining, which turned into Atalaya, which is a fantastic company. It's a fantastic copper producer on the London market. So, you know, Harry got that project up and running to start with, and now he's working on Kefi, and we work with Kefi on helping all that. And I think he's quite close to getting the financing done for the Tulu Kapi mine in Ethiopia. So that is a project that actually should now come into production at elevated gold prices. That would be a great win for him.
I mean, it is amazing. Let's just sort of finish where we started, John, in terms of gold and gold equities. I've spoken to Harry about the potential margins that are on offer at the Tulu Kapi project that he's got, and they just seem phenomenally huge now that gold is at such a high level, and presumably that's a factor that's playing into operational decisions at gold mines all around the world. You know, there's going to be cash flowing in, margins really high. These companies are going to be cashed up and wondering what to do next.
Well, there's a double whammy. I mean, you've got your average. I think the average gold cash cost is around $1,600 an ounce. It was $1,200 a little while ago, so there has been some inflation in that, but you've got oil prices at low levels. We're around $60 a barrel. Might go even lower if Donald Trump has his way. And so your margins are extraordinary, much bigger than I can ever remember. And so gold is the new oil.
Gold is the new oil. And will we see a trend set by Caledonia Mining, do you think, of more dividend payments coming along from the mid-tiers?
Yes. Oh, undoubtedly. Anybody who's actually producing gold is going to be looking at what they do with the cash, because they're going to have so much cash. They've got a choice. They either buy something else nearby, or they develop new mines, or they pay dividends, or I guess share buybacks. You know, all of those things will suddenly be important to them. For example, Resolute Mining, they were looking to acquire assets a little while ago. They didn't. So the government of Mali, the military junta out there, decided it was going to have the cash off them. They were simply not fast enough to spend the money, and giving it back to, you know. So I think they're going to need to be quick. Okay, not every company is in a country like that where the government is aggressively looking for cash to support to fight the rebels. So it's hopefully that's a bit of a one-off, but the geopolitical risk is certainly something we should all consider when we look at these companies. And certainly there's something the CEO should consider, because poor old Terry Houlihan spent, I think it was 11 days in a luxurious jail with no windows, etc., etc. So yeah, it's tough, but Yeah, there's going to be definitely more dividends, more corporate action, because the amounts of cash coming off will be, well, no one will have ever imagined that much money coming into their treasury.
Finally, John, can you tell us about any of the IPOs you're working on, or are they all top secret?
That's a good point. I'm not sure what I'm allowed to discuss, but we've got something in Botswana at the moment with a package of land. So yeah, we're working on a few things. I like Kavango in Zimbabwe. I think they've got good potential going forwards. Yeah, there's stuff happening.
Well, we look forward to lots of news flow from SP Angel in what looks like a pretty bullish environment. And yeah, I hope you guys have a profitable time in Indaba, John.
Look forward to seeing you there, Alistair.
Thanks very much, John. See you next time.
Thank you.